We were looking at financial market, the case where we have the central bank plus the banking sector. And there we talked about how financial market equilibrium can be expressed in two equivalent ways. One, in terms of demand for central bank money is equal to supply of central bank money. And second, in terms of overall money demand is equal to overall money supply. So now let's look at overall money demand. Now, overall money demand is dollar by LI, where money demand and interest rate are negatively related. So when we plot our overall money demand curve in a graph with M on horizontal axis and I on vertical axis, it will be a downward sloping curve. So if you go back to case one, in case one, we also talked about how financial market equilibrium is where money demand is equal to money supply. And over there, money demand was also dollar by LI. So now the difference with case one is that now the demand for money involves two decisions. One is people must decide how much money to hold, right? You decide how much of your wealth to keep in the form of bonds and how much to keep in the form of money, right? So this decision is involved in both the case one, where we did not have a banking sector, where we only had the central bank, and this decision is also involved in the case where we have a banking sector. But now when we have a banking sector, you must also decide how much of this money to hold in the form of currency and how much to hold in deposits. So overall money demand in this case, like the case where we do not have a banking sector, the overall money demand is still dollar by LI. The only difference is now you have to make two decisions. The first decision is how much of your wealth goes in bonds and money, as was in case one, where you did not have a banking sector. And the second decision, but now you have to make with the banking sector is also the type of money that you want to hold. Do you want to hold it in the form of currency or deposits? So case one, where you don't have a banking sector, plus case two, where you do have a banking sector, in both cases, you need to decide how much wealth goes in bonds and how much goes in money, right? Where money is just dollar by LI. And now when you have a bank, where your demand for money is dollar by LI. And now when you have a banking sector, you also have to decide the type of money do you want to hold. Do you want to hold it in the form of currency or do you want to hold it in the form of deposits with your private or commercial bank?